My name is Jeff Clark. I've been with GoldenCare for 25 and a half years. Spent the first 5-6 years selling exclusively in the field. Probably wrote, I don't know, around 500 policies. And then I got kind of promoted to this director spot where I kind of help recruit and train agents. I have done training seminars, in most of the country at this point, I guess. I continue to write. I keep my certifications up. I've probably written another couple 300 since I've been not necessarily active in the field. I think when you're in insurance, you get a lot of referrals. You get, sisters, brothers. So I do keep myself somewhat up to speed with the products. But mainly my job now is to, put together webinar topics, help recruit, help train, help design products. And I always tell my agents out there, whether you have a married couple and that's healthy in their 50s or a widowed lady with osteoporosis and a compression fracture, GoldenCare has a bevy of products that will help you basically place anything you're looking to do. Depending on their health, depending on their age, depending on what they're up to, between the long-term care plans, short-term care, and home health care only plans, even though all down to true freedom, depending on what the health is, what the situation is, we like to say that we're kind of that home for long-term care. I do, I guess, continue to say this in a lot of the webinars we've been doing. COVID really opened the eyes of a lot of folks on nursing homes. There's stats out there. As a Harris poll, it said that 61% of people would rather die than go to a nursing home. The truth is 75% of people who died from COVID were in a facility of some kind, assisted living, nursing home, et cetera, et cetera. And the public is very aware of this. And so my agents have always asked me, how do you start the conversation? How do you, bring up long-term care? It's, they're not super confident with it. So what I've been telling people, I guess, for the last year and a half is, maybe you're not super confident, but your clients are looking for answers here. You would be amazed at how receptive they would be to even mentioning the word, long-term care. They don't want to go to a facility. They don't want to be stuck, stuck with helping you see family and friends. They don't want to basically be a place that could be a much higher contagious. There's stats out that more or less said you were 11 times more likely to contract and die from COVID if you're in a facility or if you're receiving your care at home. And so these are all things that just point right to long-term care. So anyways, you'd be surprised how many people, the consumers are a little frightened right now about the whole concept of needing care in a facility. So bring that conversation up. You'd be amazed how, again, how receptive they might be. Before we get started, it is Long-Term Care Awareness Month. And because of that, we're giving away some extra things. We normally give you a complimentary CE voucher for attending all of our webinars. We get you a copy of the webinar. But this particular month, we're going to send you a link to access a toolbox of free consumer and marketing materials, a complimentary pack of LTC Awareness Month infographics to help you generate interest and establish the need for long-term care. I know we've got conversation starters and things like that out there too, and all the carriers put them out this month. You'll probably notice if you're in your LinkedIn or anywhere that it's Long-Term Care Awareness Month. Tons of stuff out there. We can help you get that. So after the webinar, be on the lookout for that thank you email, or we'll send links to kind of some of that stuff. And if there's other stuff you need, by the way, for Long-Term Care Awareness Month, just call us at the marketing office. We've got materials and infographics and for all the different carriers. So lots of stuff there. Okay, so introduction. So, a lot of our, we have some at one point, I think we had some 25,000 brokers around the country in our network. And, our average agent wrote one app a year. So yes, obviously we have agents that write, 50 to 100 apps a year, but most of them write zero. A lot of our people, we hear from like every year, maybe every other year. The client literally came into their office, sat down and said, I want to buy long-term care. And so we put together a quote for them. We get them an app, we get them a brochure, and we kind of walk them through it. Not to be dangerous, they write the app. So there's really, an apprehension on agents because they just don't do it a whole lot. And so a lot of our audience, I guess, the people who are well-oiled machines and long-term care experts, they don't really attend many of these webinars, right? They're probably busy running business. So for a lot of our agents, we realize that it is kind of a complex product. It's something they maybe don't deal with every day. A lot of our agents have a Medicare background, annuity, or they're somewhere in the senior market, and they kind of dabble in long-term care. They know it's important. And I think the reason that people don't offer more of it, a lot of the financial planners I talk to, a lot of the agencies, Jeff, I just don't feel that confident with it. There's a lot of moving parts, and it's just I feel like I don't really know it that well, and there's a big learning curve on it. And I always try to tell people, if you keep it very simple, and what you should do for your customer anyways. And I guess it's weird seeing this presentation because I know that I've said this into so many classes around the country that really there's three things: how much, how long, and how soon. There's three questions really to be answered in long-term care, and it looks like we're going to go through those three things. That's 95% of the task is explaining those three things, and I think that's what we're going to do next here. So how much? So when I sit down with the customer, it's like, okay, if I end up needing care, if I have a stroke, I have a heart attack, 15 years from now, how much a month used to be per day, but we talk in months mainly now. How much is this policy going to pay me per month in the event that I go on claim? That's kind of the first question you're answering. And this seems simple, but I can look up a nursing home. I can go to Gemworth's cost of care surveys, or I can go to Mutual Omaha's got one, where I can look up any given area of the country, and it'll tell me how much they're charging for assisted living. They'll tell me how much they're charging for nursing home, and they'll tell me what the going rate for the median rate for home health care aid might be. So knowing that, let's just say we're in the middle part of the country. We're in Kansas City, Missouri. It might be $6,000 a month there, $7,000 a month there for nursing home care. And that's the average. It can go up if you have a lot of physical therapy or things that are being administered there at the nursing home, or if you're there and you're very low, there's not much going on other than just maybe some prescription drug administering. That's about it. So let's just say, $6,000, $7,000. Agents sometimes make the mistake then and go ahead and try to write a $6,000 a month policy. You got to figure when people end up needing end of life care or long-term care, they're probably not going to be living at home anymore. They don't have the mortgage payment, the electric bills, the heating bills. So we don't necessarily need to design a long-term care plan that's going to cover 100% of the bill. If they have plenty of money and they don't care what the premium is, in my experience, most of my clients wanted to keep premiums down. So what we usually do is we're going to write about a $4,000 a month benefit in that scenario, maybe $4,500 a month, knowing they're going to be able to come up with the other $2,000, whatever that might be. So, I don't mind writing a $4,000 or a $5,000 benefit, but then I do walk through the client how much. So in the event that now assisted livings charge about, in the Kansas City area, I bet you they're averaging around $4,000 a month. Nursing homes might be at $7,000 a month, or higher, depending on a private room or not. And home care is probably around $3,500 to $4,000 a month as well. So how much? I walk through my clients through this. So in other words, and then, so the next question is going to be, naturally, well, okay, so I'm going to get this, I don't know, $5,000 a month coming into me. And if I end up in a nursing home or end up in assisted living, well, the natural next question would be, how long, right? How many months of $5,000 a month am I going to get? And so as you're designing this long-term care, the how much is, just look at your local costs. Ask your client, do you have other income? Do you have other pensions? Do you need this policy to pay the whole amount? Or, are we just talking about maybe not, just taking the interest off your investments and not actually attacking the principal, right? So after the how much, how long? And that, well, looks like they're going to do a little, this is how I explain how much, how long, and how soon anyways. The brochure will tell you there, you can pick between, I'm talking about the Mutual Omaha cost of care study. All right, how long? So the how much, again, that part, I do see agents sometimes trying to make the policy do too much. They'll quote the $6,000, $7,000, $8,000 a month benefit, and then the how long part, they'll do, try to do an unlimited benefit, or they don't have those anymore, or a $500,000 pot of money. So the how long. Now this part, whether it's going to be, I don't know, 24 months, 36 months. How long will this $5,000 a month continue to pay? And this is something the agent picks. Now, I could tell you that 90% of claims don't exceed 2 years. So, I don't mind starting out with a 2 or 3 year benefit. Now, when I say 2 or 3 years, it's just the easiest way for us to say it. We've done it in this industry for 20 years. When I tell someone it's a 3-year plan, that generally doesn't mean it's a 3-year plan. So, if I'm in a nursing home, I don't pass go. I go directly to a nursing home. The policy is set up to pay me $5,000 a month. Well, if I have a pot of money of $180,000, that's going to last me exactly 3 years, right? $60,000 a year. So, and that's again, if I go right to the nursing home and use the benefits from that day, then in 36 months later, that policy will be exhausted. So we call it a 3-year plan. In reality, a 3-year plan, a 36-month, $180,000 pot of money is going to last a lot longer than 3 years. 80% of claims start at home. 13% of claims end up going to assisted living. And so, the nursing home is a little more not as common. Sometimes there's into the nursing home back and then they end up back at home. The point is that when you're getting care at home, you may be getting care once or twice a week. You're only using that policy 2 out of 7 days. So naturally, it's going to last you a lot longer than the 3-year period. Normally, someone has a stroke, someone has a heart attack, the family rallies around the family member to try to take care of them. So they start out with a home care regimen. Maybe at some point, the stroke is too severe. They end up in assisted living or a nursing home. So when I tell people how long, it's a pot of money. And if I give you $200,000, that might last you between 2 and 6 years. Matter of fact, just because, I wonder if I could put the software open. I do. I'll bring this over real quick. So again, this is the software for Mutual Omaha. So again, the 3 things: how much. So here I was going to do $5,000 a month. Here is the how long. 180,000. Okay. No inflation with this. Okay. So how much? How long? $180,000. So this amount, this $180,000, the how long. So essentially, sometimes you might use the cash option, the $1,250 a month, and pay a family member. So when people ask me, how long will $180,000 last me? I tell them it's going to be between 3 and 12 years. The care will last, a minimum will be 3 years. But if you're like most people and start at home and get some other stuff, this policy should last you between 3 and 12 years. So how much? How long? And the third thing would be how soon. And that's your elimination period right here. Okay. In other words, all right, so I've had that stroke. It looks like I'm going to need this policy. I understand I'm getting $5,000 a month, and I understand it can last me what's a total of 180,000. So whenever I use that up, So the last question would be how soon, and this is an elimination period. You can pick 30, 60, 90. Most people go with a 90-day elimination period because Medicare is set up to cover your first 20 days of skilled nursing facility. Your Medicare supplement or Medicare Advantage plan, in conjunction with Medicare, pick up days 21 through 100. So typically, a lot of folks sell what's called a 90-day elimination period because this is a long-term care plan. Couple caveats about the Medicare stuff, just in my experience, just taking care of my dad or my mom and dad. It doesn't always work out where you're going to get this 100 days. The first thing is that you have to have a Medicare triggering event to get this 20 days of Medicare coverage. So you have to have had a stroke, end up in the hospital for at least 3 days. You need to check into the nursing home within 30 days of having that stroke or being in the hospital. So that's qualified for the Medicare help. So this is why, again, it's not always 90 days, but for the most part, we're set up to be covered for 90. In reality, Medicare ends up covering, 40, 50, 60 days a lot of times. It's just, as soon as you level off, they're not going to cover anymore. But the how soon, this is your elimination period. So typically it's going to be 3 months. Now, a lot of people get hung up on how does the elimination period work? When do I know that my benefits are going to kick in? What they're speaking to here is the activities of daily living. There's 2 ways to trigger a long-term care policy. One of them is naturally cognitively impaired. Well, when I say cognitively impaired, it means I'm not losing the car keys, I'm losing the car now, right? So cognitive impairment is not going to get better. That's one way to obvious trigger. Alzheimer's, dementia, that's going to trigger a policy. The other way is just plain, I'm getting old and I can't help, I can't bathe, I can't dress myself, These are called the activities of daily living: bathing, eating, maintaining continence, transferring. Okay. So to trigger a long-term care policy, you have to have this 90-day certification period. In other words, a doctor has to deem in his eyes that this 2 out of 6 ADL deficiency is going to continue for a period longer than 90 days in his estimation. So you have a stroke, you have major paralysis, you're not getting better anytime soon. That's going to be a long-term care claim. Then it's the house soon. It's 90 days later. This policy kicks in a nursing home. Remember, with Mutual Omaha, there's a cash benefit built into that thing. So that's first day benefit. So if you hit the triggers, you're getting paid first day. Family members, friends can get paid. Hip replacements, knee replacements, those typically aren't long-term care claims because, again, they expect you to get better within a month or two. Okay, heart attack, again, not a long-term care claim. So that's basically the three things. How much per month is this policy going to pay me? How long will that last? When do I start getting it? And there again, if I can go back to software. So first three things, if you ever run a quote for Mutual Omaha, if you don't have this quoting software, it's mutualltcquote.com. mutualltcquote.com. Outstanding software. But if you'll notice the first three things you put together here, how much, monthly benefit, policy limit, how soon. Those three things, folks, are the nuts and bolts of every long-term care policy out there. If you can understand those three things, how much, how long, how soon, you can do it. Now, the next thing, obviously, over here, inflation. Well, yeah, then if they're in their 40s or 50s, we probably should put a cost of living in there, right, to keep it kind of in pace. If they're in their 70s, sometimes I don't. I just put the amounts a little higher and I waive the inflation. But the rest of these things are just all bells and whistles, right? We'll do assisted living, shared care. And I end up putting maybe shared care in some policies. I do like the survivorship. I'm not going to go through all these, but this is basically the nuts and bolts right here. How much, how long, how soon. All right, what else we got in this part of the presentation? No, that's it. Yeah, okay, I couldn't agree more. How much, how long, how soon. And then, of course, just with our options, whether you're putting the inflation in there, the extra bells and whistles, the shared care, these are things you can just page to the brochure and kind of go through. My personal opinion when I'm doing it, I'll show you the software. I will sell sometimes the home healthcare waiver premium if I'm going with 90. I'll sometimes on the facility part, that's going to be 90 days for the nursing home or assisted living. But the home care part, I might want nurses coming out right away, so I might put that in there. A home healthcare waiver is one of the riders I do. Sometimes it's a married couple, it's a shared care, so they each get 180,000, and then if one uses that other pot up, the other person can borrow from their pot of money, so it's a shared care. Other than that, I don't really do much else on these policies. So, how much, how long, and how soon. And to figure, for this couple, they're in their 40s. I probably would put some inflation in there, and maybe 1-2%. Yeah, something like So, depending on what kind of money, if they only want to spend $100 a month at each or 150, I'd keep it down there. So that's kind of it, folks, as far as putting together a plan. How much, how soon, and how long. Okay. A reminder here. A little note about compensation. I'm sure you guys are aware of this, but unlike Medicare supplements that pay, for years 1 through 6 or disability income or critical illness, long-term care insurance continues paying you for 28 years on average. The average policy is held for, I think it's 28 and a half years. So I always said the commissions for long-term care have some serious legs in them. You're getting paid for 30 years in this, and they're 99% persistency. So they're little chunks of gold that you're selling when you sell long-term care. The renewals there can give you some amazing stability. So I guess there's a summary here. How much, how long, how soon. Again, that's the nuts and bolts. So if you're someone who's not real confident about it, you can do this. Pretty simple. So it is Long-Term Care Awareness Month. We're going to hit you with a thank you, a link with some stuff. If you need stuff to help you kind of make your clients aware of it. Like I mentioned in my beginning, you'd be surprised how receptive people are. It is LTC Awareness Month right now, and people are very aware. There's another stat at this Harris poll. 87% of Americans think that long-term care is an important thing to be talking about right now. 87%. So don't be afraid to bring the topic up with folks. If you need anything, need lead creation or that kind of stuff, or a PowerPoint or any help at all, we've got all kinds of stuff here to help you guys be successful. So I'm going to give you our number, 800-842-7799. So again, short and sweet webinar here, folks. Keep it very simple. How much, how long, how soon. The rest is just bells and whistles. Call us if you need us, 800-842-7799. I want to thank you guys for taking the time. And remember also, if you can never go to a webinar or you missed a topic, we have all of our webinars, all of our training topics, anything from selling, the presentation, the missing link, to the pivot presentation, to all of our products, all can be found on our library at GoldenCareAgent.com. Our agent resources, tools, webinars, but they're all recorded, different personalities that do the training. So take a look at some of that. There's also great marketing stuff on our website, GoldenCareAgent.com. Otherwise, 800-842-7799. And thanks, folks, for coming on board today.
Check out our website, GoldenCareAgent.com, or give us a call at 800-842-7799.